All right, so when it comes to investment properties, getting debt on investment properties, one of the things that I wish I would have known earlier that you probably don't know is it's not just about interest rates, it's cost of capital. Now, if you learn cost of capital early in your career, it's gonna save you and make you a ton of money. So a lot of times people say, well, I just wanna get the best interest rate. Well, interest rate is just one factor of cost of capital. So in the investment game and in loans in general, there are all kinds of fees and points and things associated with borrowing money. And for instance, there could be an underwriting fee, there could be points on the loan, there could be all kinds of things. And what I want you to understand is, yes, it's a fee for doing business, but that's a fee in doing your cost of capital. So your cost of capital could go from 9% to 16% with all the fees and things, and people don't understand that. So a lot of times they look at, well, what's my interest rate? Well, this lender will give me a 10% interest rate, this lender will give me 12. I'm gonna go with this 10%, but not realizing there's 4% worth of fees in that loan, so it's actually gonna cost you more. That's your cost of capital. So what you have to understand when you're borrowing debt, it's the cost of capital. What is the cost gonna actually cost you total? And interest rate is one cost. You have points, you have fees, you have underwriting fees, you have endorsements, you have everything. So when you're looking at debt and when you're looking at structuring debt, interest rate is one thing. Cost of capital total is where you've got to win. Because if you, let's just say you do 20 deals in a year and you shave off 2%, right, per deal of cost of capital, I mean, that could be, depending on what market you're in and what your sales price is, that could be 6 figures. And you were so worried about interest rate that you took a lower rate but a higher cost of capital. When you could have took a higher rate, lower cost of capital, your total cost would have been lower and the money would have stayed in your pocket. See, a lot of people don't tell you this, and a lot of people, you don't understand this because banks don't necessarily go out there and shout, or lenders shout, well, our cost of capital is lower. They all lead with interest rate. And you've been trained to negotiate on rate, right? And you've been trained to look for rate, right? Most people have. You've not been trained to look for cost of capital. Understanding cost of capital will make you way more money and save you way more money if you understand this concept. And this is not what people are willing to tell you. So I'm willing to tell you this now. So when you go look at a loan and you compare two loans, you need to know, what is the total cost of this capital? What is it going to cost me in total, right? Outside of just interest rate. And you need to compare the 2 or 3 or 4, and you need to go with who's going to be the lower cost of capital, because that is your true cost. It's not just interest rate. So if you're out there and you want to invest in real estate, understand this concept and really back into this concept, because it can save you a ton of money over the long run. And it can really change your profitability, especially over a long period of time. Negotiate for lowest cost of capital, not just the lowest interest rate. And the lowest interest rate's not always the lowest cost of capital, and you need to understand that. So if you're out there and you find this video helpful and you want to learn more about investing in real estate, check out my YouTube channel for other videos we do on investing in real estate, and check out my podcast where we talk a lot about investing. All of it's free. It can help you on your wealth building journey.